All right, let's ease into this day. Good morning, everybody. Morning, Ron, Daniel, Walter. Nice to see you. Still have a low body count in here. I think people are waking up. Thursday morning, maybe they went out, little happy hour yesterday. That's okay. Welcome to the education room, guys. Nice to have you guys here. I'm going to give it just a minute. It's not quite 9 a.m. But sometimes I sit here and I'm like, you know what? I'm just going to go ahead and get this thing going. And that's exactly what I did. All right, there we go. 9 a.m. If nothing else, I'm prompt, right? Punctual. Guys, it's great to have you in here today. Um, now that audience is starting to grow a little bit. My name's Mark. Good morning, Bobby T. Good to see you. And I'm going to be walking you through the wonderful world of Nexgen this morning. We're going to talk an awful lot about rules and patterns and paths and how to get to where you want to be. Good morning, Jose Trades. Good to see you. I guess I don't really need to say trades at the end of that, do I? I like it. Guys, I'm going to start this class with a reminder that there really is a path. There is a step-by-step path to becoming a confident trader ASAP. And that's exactly what this class is focused on. And it's a two-part process. And the first one is, guys, I'm going to cordially invite you, post your trades in class. Hey, good morning, Ziba. Don't just show me your winners. Good morning, Mohammed. And I know that it's difficult. I know it's difficult to put yourself out there, to take a loser and go, man, I don't want to share that loser with the world. It doesn't feel good, but the reality is that there's a lesson in every loser, guys. There's a lesson every time you pull the trigger. So here's a trade from this morning, guys. I used my checklist. I had my rules met. Everything was perfect. My entry was right where it was supposed to be, and it ran me right over. And I took one of my losers this morning. So there you go. I'm going to share with you guys. I had every reason to take this trade. I had every advantage to take this trade. I took it. It didn't work out. Some of you might have taken the same trade. And the reality is that the methodology that I trade, guys, the methodology that I teach is something that has the potential to win 70 to 80% of the time, which means, and this is a tough pill to swallow for some people, that 20 to 30% of the time, you're just going to have to take a loser. You don't see what, Ron? You don't see my loser? Well, that was just the entry. We're working off a trust here. I knew it lost. I'm worried about my entry conditions, and I'm actually glad that you said that. Guys, my goal is execution. My goal is following my rules to the letter every time. Winners and losers don't bother me because the methodology that I trade has been proven. I've got thousands of pictures and tons of study hours. It's proven to win more than it loses, right? And every now and then we just got to take a hickey. It's a cost of doing business. And that's exactly what I sent John Novak. I took the trade. He managed it a little better than I did. My first target was hit, but it didn't fill, and it dropped like a ton of bricks. And it just took me out, and that's all it was. It wasn't a full loser. It was a small loser. And I lived to fight another day. But that's all you can do, guys. So posting your trades in class allows you to understand if your execution is where it was supposed to be. Posting your trades in class is going to get you feedback. 15 hours a week, live, every week. You're going to have the opportunity to present what you see, what you've done, what you think, what you feel, and we can have a conversation about it, whether it is a focus on understanding the rules, or maybe it's a management question. Maybe you took the perfect trade, just like I felt I did, and it lost, and you're sitting there thinking, man, I'm just not getting this the way that I need to. And then we go through and we run through the rules together, and you realize that you did it perfectly. And sometimes those perfect trades don't give you the perfect outcome. So post your trades in class. And then the second half of that is make sure that you track your real-time performance in a spreadsheet. And this is one of the most underused tools by anybody learning the software. There's 3 tabs on your spreadsheet, and let me show you where you can find those tabs. And I'm starting with these 2 today. I've changed up my routine a little bit because I think that these 2 are the most important. Straight from the tutorial section, there's a trade tracking sheet available for you right here. This link takes you to a Google document where you can download this. If you're brand new, this is already on your computer. It's already there. You can take a look at it. Hey, what's going on, Ed? Nice to see you. This first page is where you can track everything that you do, every winner, every loser. Every time you pull the trigger, you're going to put it into this first sheet. You're going to talk about how you felt. You're going to talk about how you did. You're going to talk about what happened. Did you follow your rules? Did you break your rules? Did you notice something that might have made a difference? And you're going to talk about the result. And you're going to be able to take this first page and you're going to recognize patterns in the market, the patterns that are making you successful. You're also going to recognize patterns in yourself. And most people don't realize this, but we all have maybe a rule that we break or a look that we're attracted to, whether it's longs or shorts. Some people love to fight the trend. Some people hate to fight the trend. But what happens is every time you present that picture in class, I'm going to begin to recognize your patterns and we'll identify them and work through the challenges that you're having together. The second page is the client trades example page. And guys, this has over 60 pictures of high probability trend trades. Hey, good morning, Gary. This has the perfect looks, the rules met, your focus for the first 30 days. Go through, take this page, study it, look at what's going on. And then finally, there's one for you to put your pictures, your favorite looks, your best looks in there. So use this as a study guide. Hey, good morning. What's up, KR? All you guys coming in. Good morning, Kulu. I see you typing. Absolutely it is. So let me give you a link to it. If you're computer savvy, it's really easy. I'll show you guys how to do it. Trialists are my favorite people, Kulu. So here's the link, and that'll take you to the Google document. But from the Google document, you're going to need to download it to make it yours. And it's just pretty simple. It's File, and then Download. Do you have Microsoft Excel? I typically download it as an Excel spreadsheet. Yeah. Once you do that, it shows up down here in your download bar. And then when you click on it, up comes the sheet. It's real easy from there. Just enable editing and go File, Save As. And then just pick a spot on your computer for it and you'll be good. Or if you want, let me show you the other link from the page. You can actually get, and this is a copy of mine, my personal one. You can click this link for the Excel version. And I'll give you the link. And then just download that Excel version. And the Excel version is actually my spreadsheet, my personal one, and it's going to have closer to 130, 120 pictures of high probability trend trades for you, so that you can go through. And guys, we have this so that you can begin ingraining in your brain what that best of the best look is. So we're going to focus on following the path, guys. We're going to look for your pictures in class. I want you to show me everything that you're doing. And I want you to take everything that you're doing and put in the spreadsheet. And what I've found is that the people that embrace this get exactly where they want to be the fastest. And this is what we're going to do today. We're going to learn the trigger line and rules for when it's okay to trade. You guys are going to simulate your trades and post them in class, making sure that you have the correct rules. We're going to simplify. We're going to keep it simple, guys. 1 trade, 2 charts, make it happen. You'll be able to go and do market replay the day, increase your repetitions, fix the mistakes, take the pictures, and repeat this process every day, guys. So that's what we're going to do. And we're going to do this in the most simple way I know how. We're going to focus on 1 trade. Let me close this out. And it's going to come from the tutorial section. When I click on this link for the tutorial section, there is a spot that says your first 30 days and beyond. Hey, good morning, Thala. Welcome back. This tells you for your first 30 days. And guys, 30 days is only 20 trading days. That's less than 3 weeks, right? Focusing on those 5-1 trend trades, on those high probability trend trades, that's going to be the goal of what we're doing, because a high probability trend trade is a confidence inspiring trade. It's a trade where every indicator on every chart agrees for the trade. You've got the strongest triggers. You've got nothing in the way, nothing between you and your targets. Guys, this is that exact same trade that when you follow these rules, when you follow your checklist, typically wins 70 to 80% of the time. If you focus on this high probability trade, if you commit to simplicity for just a couple weeks, there's this magical thing that happens to you. And suddenly you can read your indicators, you can read your charts, you understand the information that they're giving you. Because trading the market is literally 90% chart reading and 10% of trading. 90% of waiting for the advantages to be present so that you can take advantage of them. And your chart reading is going to incorporate 3 essential elements. You're going to be able to open up the software, take a look at it, and understand where the market is likely to continue. And we're going to teach you how to take that continuation point for an entry on a high probability trend trade. You're going to understand where the market is likely to go, and you'll be using that for profit targets over time. And you're going to understand where the market is likely to stop, where that trend is likely to end. And you'll use this not only as a giant waving red flag to not take that next trade when the trend may be ending, but also to use it as an anchor point for that high probability trend trade, looking for those trend trades that happen after a termination condition on your larger chart. And those are those areas where it's likely to stop. So these 3 simple rules are going to come about, and they're each going to provide an advantage for you. And guys, I do a lot with pictures, and I love to share these pictures in class. So do me a favor, every time I post a picture in class, steal it, put it in your spreadsheet, label it. The first one I'm going to share are just the rules. And you'll see that there's only 3 of them. Each rule is designed to provide you an advantage. Your first rule, rule number 1, says that the large chart needs strong trigger lines. Rule number 2 says that there's no termination conditions. And rule number 3 says that we're going to find an entry. We're going to use a limit order at the areas and the triggers. And what each of these rules provides is a very, very clear advantage as you get into a trade. And a trade is a simple equation. It's momentum, rule number 1, plus a clear path, rule number 2, plus an entry area, rule number 3. And these 3 rules, these 3 advantages come about on 2 charts. As you grow with the software, you'll probably add a chart. You may add a different time frame. You can trade any market you want. You can trade your stocks. You can trade your cryptocurrencies. You can trade futures. People use these for options. What I'm going to teach you is pattern recognition, chart reading on only 2 charts. We're going to keep it simple and focused in the very beginning, understanding that you're going to grow a lot as you get the repetitions. But on the 13-2 chart, this is a broad stroke of a brush. It's a larger chart. It's a slower chart. And we only need the most current bar to determine the trend of the market. On the most current bar, we'll look at the background. If the background is green, we're in an uptrend, should only be looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend. Color coding makes it easy. In that downtrend, we're only looking for rules to be met for high probability trend trade short. Guys, the first advantage that you can give yourself is just not fighting the trend. Your first 2 rules happen on this large chart. The rule 1 of strong triggers, giving you the advantage of momentum. The rule 2, no termination conditions, making sure that you're not trading into an area likely to stop the market. These rules must be true, they must be met, and then we're going to turn our eyes to the 5-1. The 5-1 chart is an entry chart. We're just refining that broad stroke of a brush. We're taking the information that the 13-2 gives us, and we're going to whittle it down. We're going to pinpoint to one spot where the market is likely to continue. And that's where that rule number 3, the advantage of an entry area, comes in. And we're going to be so precise that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, meaning we can literally wait for the market to come to us. So this two chart scenario creates a pretty awesome look at the market. Your large chart is the risk reward offered part of the clear path of the trade equation? Kulu, it really is. So we're going to use Fibonacci, and when we go through entries, I'll explain it a little more in depth. But what you're going to be able to recognize when you look at your charts is when you have that clear path, you're going to be able to gauge from your point of entry to that next potential target spot so that you can look at your risk to reward and understand if it's acceptable to you. Sometimes it will be, sometimes it may not be, but it'll become a very easy calculation for you. And when we get to the entry, Kulu, I'm going to show you exactly what I mean on that. Sound good? Pinpointing it helps with that minimizing risk and maximizing profit potential. Guys, the two charts, this is one of my favorite pictures. Two charts, 13.2 is the large crowd. These are the guys that are in control. These are guys that are creating the momentum. These are the people that are letting us see that clear path. The small crowd, those little people fighting the big crowd, are what are going to get us to our entries. So that two chart process, they kind of work harmoniously to put you exactly where you need to be. So we're going to go ahead and we're going to take a look at rules now, guys. I spent my first 30 minutes really focused on rules. If you have a question about anything that I'm talking about, please just raise your hand or just post it right in the room. 13.2 chart needs to have strong trigger lines, giving us the advantage of momentum. This is going to be the first rule on the 13.2, and strong trigger lines are going to be very easy for you to recognize. When that background is green in an uptrend, you'll notice that your small triggers are above the large triggers. Your large triggers are wide. They're angled in the direction of the trend. It's the space between the small and the large that let you know that the momentum is its strongest, that the odds are favorable for the market to continue up. And you're going to hear me refer to this a lot, odds favorable momentum. Did you have odds favorable momentum? Because when you do, you're giving yourself that advantage of momentum. In a downtrend, background is red, you'll notice that your trigger lines, the smalls are below the large are wide, they're angled in the direction of the trend. The odds are favorable for the market to continue down. So when you're annotating your charts, when you're talking about your best of the best looks, you can use that phrase, odds favorable momentum. And when you have that best of the best look, you'll be looking for your opportunities during that moment when the momentum is pushing its absolute strongest in the direction of the trend. From that point where they accelerate away until they return. And you'll see on your 13.2 chart quite a bit, you'll see these tails. If you scroll back and look, you'll see a lot of odds favorable momentum. You'll see these tails or these wicks. If you get in the habit of circling these wicks, each of those circles becomes a potential entry on that smaller, faster chart for a high probability trend trade. So strong trigger lines, committing to the best of the best, because when those small triggers work their way back inside, anything can happen up or down. Is everybody comfortable with that so far? Rule number one, giving us the advantage of momentum. Here's a great picture that I put together showing you on a 13.2 over the course of time. Anything can happen triggers. The smalls are inside of the large. You can see how the market ends up turning. With that odds favorable momentum, there's one of those tails that we see. The market continues all the way to those weaker triggers, those anything can happen, at which point it turns. The odds favorable momentum pushes down further. Then it goes into a transition period, and the cycle repeats itself. Waiting for that advantage is going to put you in a great spot, and it's going to get you looking for rule number two, making sure that there's no termination conditions, no areas likely to stop the market. And a termination condition is going to use those areas, is going to use those Fibonacci areas on the charts. I've got a great picture of it for you. And a comparison of the areas in the trigger lines. A lot of trigger line reading. They're going to gauge momentum. They're going to help you identify termination conditions. And the areas that we're looking at are divergence high. It's one of these magenta lines that prints from a pivot And this signifies a loss of momentum in the market. Divergence highs will show as magenta. Divergence lows means there was a loss of momentum as this market was pushing down. Divergence low will show a cyan line. Blue Fibonacci support may reverse the market. Yellow 1-to-1s or red Fibonacci resistance. So you guys are going to be able to gauge pretty simply your chance of success based on, or your chance of a clear path based on a comparison of the trigger lines to the areas. I work with a lot of pictures. So it's a two-part process. The first part is price reaches the area, guys. In this case, price reaches Fibonacci support. When price reaches Fibonacci support, the only job you have is to ask yourself, where are those T3 trigger lines? If all of your trigger lines remain above supports, this becomes an area likely to stop the market. This becomes an area of what we call a termination condition. So our goal as a trader, looking for those advantages, looking for that clear path, is to make sure that both your small and large triggers get to the other side of an area. When both small and large break through the area, we consider an area to be broken. You can see that support begins to act as resistance, and it's at this point right here where you have the advantage of a clear path. And you can see in this picture, you also have the advantage of momentum. Both rules 1 and 2 are met, and there's one of those tails, one of those potential entries to take you right down to Fibonacci support. Price reaches an area of resistance, absolutely no trigger lines break through. We've identified the termination condition. Is everybody comfortable with this concept? I know I've got about 46 people in here. I've got a lot of new people, a lot of people on demo right now. You're going to hear me ask a lot. Are we good with this? Are we comfortable with this? Guys, if you're not, I want you to let me know. I am always more than happy to backtrack a little bit if need be. Remember that 90% of what we're doing is reading charts, right? Price reaches resistance, no trigger lines break through. Not looking for a long trade in the moment. Price pulls all the way back to support. None of my trigger lines have broken through. I'm not looking for shorts. 90% of what I'm doing is just reading my charts. Ultimately, a termination condition creates a full reversal, gives me odds favorable momentum, and now I'm looking for that absolute best of the best, that high probability trend trade that comes after a termination condition. You'll see it in this picture, great. Odds favorable momentum coming all the way down until the price comes in contact with those 1-to-1s. When it does, your job is to say, where are the T3 trigger lines? Well, they all remain above support. No more short trades into the area, even with a red background, even with odds favorable momentum. You have given up the advantage of a clear path. That equation's no longer being met. You can see the bounce that termination condition creates, ultimately giving us a full reversal. Large triggers go from red to green. This full reversal provides us odds favorable momentum, smalls outside of the large. And you'll notice that both small and large triggers are above resistance, turning it into support. And now we have a clear path. Now you have that absolute best of the best trade. So simple process. Make sure that you have momentum. Those strong trigger lines are going to push the market in the direction of the trend. Make sure that there's nothing in the way to stop that forward progress. And then ultimately we're going to find an entry. But there's one more termination condition that I want to share with you. We can use Fibonacci to determine where the market is likely to stop. Sometimes it seems to stop in the middle of nowhere. We've got a great termination condition that you're going to recognize on your 5-1 chart. And this is the only termination condition that you're going to recognize on your 5-1 chart. And it's 3 divergences in the same price range may terminate the trend. Is everybody comfortable with the idea of what divergence is? If you're not, give me an N in the room real quick, and let's make sure that we have a little bit of clarity. I'll draw the picture anyway. Some of you might be shy. A pivot is formed when the market goes up and then back down, or the market goes down and then back up. When there is a loss of momentum in the market, thank you, Joel. When momentum doesn't follow price, if this pink arrow represents momentum, price forms this pivot, but the momentum isn't coming with the market. And what happens is, watch this. We'll just take this. Every time you see divergence, every time you see that negative number, that cyan or divergence line, it means you have a loss of momentum. Is everybody comfortable with that concept? Divergence means you have a loss of momentum. If you lose momentum 3 times, well, then you've forfeited the first part of the equation. You've gotten rid of your momentum advantage. So 3 in the same area can reverse a market. It becomes more powerful when your small triggers work their way inside of the large, meaning that we've gone from that odds favorable and you now have anything can happen triggers. And more powerful still when price can't exceed the previous pivot and we see a loss of momentum. So we're going to be able to use this look on your 5-1, on your smaller, faster chart, not only to recognize change, whoops, it just picked up. If you type on your charts and it's still not highlighted, it'll only give you the writing. Let me grab this one again. Joel, did that help a little bit? Every time you see a negative number, every time you see a cyan line, it means that you're losing momentum, right? And we rely on that advantage of momentum to get things going. So you'll see this look. Sometimes the market's coming from a low. Absolutely. 3 divergence on your 5-1 means that you're losing that momentum. The market may push back up. Even with odds favorable momentum, 3 divergence on the 5-1 lets you know that you're losing that momentum. It's a smaller, faster chart, giving you that information a little quicker. The market may push down a little bit. So you're going to use that smaller, faster chart in the moment to recognize when you're losing momentum on a larger chart so that you can stick to that equation. So we've made it through rules 1 and 2. 13.2 says that we have strong triggers, provides us the advantage of momentum. 13.2 says that we have no termination conditions, giving us the advantage of a clear path. Guys, now it's time to turn your eyes to your 5-1 chart. Your 5-1 chart is that smaller, faster chart. It's that refinement chart. We're going to pinpoint with amazing accuracy where the market is likely to continue. When the rules are met on the 13.2, this is going to be the look on your 5-1. All of your bars will be up in this uptrend. Triggers will be strong. Large triggers green, pushing in the direction of the trend. And you're just going to focus your attention on the areas that may fall within those triggers that are coming up like a shark about to breach. Every trade that you take on a high probability trend trade is going to come from an area. These areas provide a bounce point. The areas can be fibs, Fibonacci support or resistance, mid bands, or these 1-to-1s. And the key is that they're inside of large triggers. So we've made the decision that it's time to take a trade. Rules 1 and 2 are met. And the rules say that we're going to use a limit order to buy or sell a pullback. In this case, we're going to buy a pullback because everything is up. Everything is going up. The momentum is up. The path is clear to the upside. But we're going to buy a pullback, a small retracement in price. It means that with everything screaming up, we're waiting for that small crowd to push us down right to our entry point. That pullback begins with a reversal bar. This red reversal bar lets me know that the market's starting to push down a little bit. There's a little pressure to the downside. You're going to create your window of opportunity. And your window of opportunity is going to be from your highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. This becomes the area where the market is likely to continue, and you're going to put your limit order, waiting for the market to come to you just above that highest point of support. And then it just becomes a waiting game. Either the market comes to you or it does not. If it pulls down, you see that 79.21 is an area of support, the mid band, and it's inside of those favorable large triggers. It is below the top of the triggers and above the bottom of the triggers, guys. This is your window. You're now in a long trade with the advantage of momentum. You're now in a long trade with the advantage of a clear path. And you're now in a long trade with the advantage of having taken the trade where it's most likely to continue. Guys, this is your high probability trend trade. This is the trade that teaches you to read your indicators, that teaches you to recognize all of those advantages in the moment so that you can capitalize. Your initial stop goes below that window of opportunity. We can identify where the market shouldn't go so that we can protect ourselves if this is one of those trades where it's a cost of doing business. And this is a trade that I refuse to miss, and hopefully you will too once you develop the trust, because this is a trade that has been proven. When you have those advantages in place, this is a trade that typically wins 70 to 80% of the time. Once it moves in the direction of your trade, the reversal bar is right there. You can reduce your risk below the reversal bar. And you can identify using Fibonacci where the market is likely to go so you can start taking your trades and have an idea of where that market is likely to continue to. Guys, this is your high probability trend trade. Your job is to go through and study, right? To begin to develop trust. And you're going to do that looking for these tails on the 13.2. And I'm going to share this picture in the room. And then, was it Kulu? Kulu, you ready to talk about how these entries give us the opportunity to determine our path? Awesome. So we'll go through the process right now. This is two charts, 13.2, 5.1. Odds favorable momentum starts the equation, correct? There's the small above the large are wide, they're angled in the direction of the trend. Everything says up. There's no termination conditions, right? The price has not reached an area. And Kulu, this is how we're going to do it. From the top of the bar, remember that we were fine on the 5.1. The top of your 13.2 bar looks to be dangerously close to that magenta line. So you're thinking to yourself, oh no, there's really not enough room to take this trade. But remember that our entries come from a pullback to the area inside of favorable large triggers. So we can determine the distance between entry and potential target based on that pullback to the area inside of favorable large triggers. Does that make sense? So what appears to be 5 ticks, in all actuality, is more like 32. And that pullback allows us to reduce our risk. It allows us to maximize our profit potential because we're letting it come back to that bounce point inside of favorable large triggers. Does that make sense a little bit? So you're determining your clear path from point of entry to your first Fibonacci problem. Awesome. For your first 10 days in the classroom, one of the greatest things you can do for yourself, guys, is go to the 13.2, look for that odds favorable momentum, and look for those tails, and let's see if we have any. The S&P's been going a little crazy this morning, hasn't it? Odds favorable, everything says up. I'm going to circle a tail. Odds favorable, everything says down. I'm going to circle a tail. Does everybody see? All we're doing right now is we're looking at a 13.2 chart. That's the first step of the equation, having the rules met here. So the next step is to come over to your 5.1 and let's see what that circle looked like. I'll blow it up a little bit. Guys, this is your S&P trade from this morning. Is this SETA? I don't know. Kulu, can you show me a picture of it? I was not awake at 21:10. last night. We can scroll back. Guys, I have a checklist that I use with every trade. Let me give you a copy of my checklist. Is the market coming from a good top or bottom, guys? Are we coming from a termination condition that's created a full reversal? The answer is absolutely yes, we are. So then I go to my next step. Do I have odds favorable momentum on the 13.2? The answer is absolutely yes, we do. No termination conditions. Price hasn't reached that key area. The small have smashed through the area. Yes, I love everything about it. And look how the market, after the reversal bar, comes back. If I circle my highest point of my trigger lines to the lowest point of my trigger lines, and then I circle my highest point of support to my lowest point of support, can you see how the market has pulled into the window of opportunity and then continued on in the direction of the trend? Guys, this is a 100% beautiful rules-based trade. So I've taken the picture of my trade and now I'm putting it in class. This is your job. Post it in class. Let's talk about it. And then the second step is I need to share this to screencasts. And all of you guys have screencasts when you got your capture software. And when I share it to screencast, it provides me a link. And that link allows me to share it into my spreadsheet. So we're going to develop trust through repetition. You're going to develop trust through repetition. I'm going to put that in. And guys, now I'm up to 128 pictures. 128 rules met pictures in my spreadsheet. All right, here's your gift, guys. There's my spreadsheet. You can have it. Instead of the 62, 63 that were on the other one, here's 128. I just put my spreadsheet in the room. Feel free to grab it. So what am I doing? I'm developing trust in the rules. I'm developing recognition. And if I scroll back and go to that next circle, let's ask ourselves again, did we get that perfect trade, guys? I'm going to do it like this. Let's walk through it together. Get rid of this circle. No cheaters for you guys. Brand new users, Kulu. Who else is in here brand new today? Thala. I can't see my audience list like I used to be able to. Do you guys want to go through an entry? Because this is something that you can do as well to help you figure out the best of the best. But it all starts on the 13.2. Do we have odds favorable momentum? Small triggers below the large triggers. The large triggers are wide. They're angled in the direction of the trend. The odds are favorable for this market to continue down, yes? Have we reached an area of support? Has the market touched a Fibonacci support? One-to-ones? It's okay. So Thala, what I will do, and this is how the class works, and I know that you're still new, is I'll go through the rules, we'll talk about entries, and then I'll scroll up to the very top, and then I'll work my way down. So sometimes there's a little bit of a wait for you, but I promise I won't skip it. And if you notice that I did, let me know. Awesome. But I promise I got you. Rules 1 and 2 are met on the 13.2. Does everybody agree? Small's below the large, large are wide, nothing in the way. Cool. Guys, this is your best of the best look. So on the 5-1 chart, I'm looking over and everything says down and my triggers are way up here. And the markets is just moving down, right? What are we waiting for to get our window of opportunity? Boom. Reversal bar. Signaling the beginning of that pullback. As I'm going to give you the easiest way to pick your spot. Take your drawing tool, if you're going back historically especially. Go from the top of your trigger lines to the bottom of your trigger lines. Is everybody comfortable with this look? I've identified the top of my triggers and the bottom of my triggers, and I know that my areas for entry need to fall within. So I can take this box and I can take the bottom and squeeze it all the way up to the lowest point of resistance. And I can take the top and squeeze it down to the highest point of resistance. And now I've identified where the market is likely to continue. Give me a Y in the room, new users, if you're with me. 13.2, Thala, great question. Remember that the 13.2, that's one of those awesome questions, is going to give us momentum. It's also going to identify termination conditions. The 5.1 is just an entry chart. So we've identified our window of opportunity, and I want you guys to remember, the rules say put a limit order in a tick or two below that area of resistance. Because of all the momentum, because of nothing in the way, we're going to catch it at the bottom with the understanding that it may go to the top. So as that market begins to pull back, you can see that my entry is about a tick below the mid-band, and we're just waiting, right? We're like, oh, here we go. Rats. Rats is a technical term. You can put it anywhere in the window, right? Bobby, but with all that momentum and nothing in the way, I'm always willing to get in low and let it push high. Whoops. Discord just booted me out. On my way back, guys. I know you can hear me. Just got to get my screen up. Sorry about that. Every now and then Discord gets a little temperamental. All right. Are we back? Can you guys see me again? My apologies. Awesome. So yeah, Bobby, with all this momentum and that clear path, I love the bottom of the window. About a tick below that mid-band, tick or two below. But the market didn't get us, did it? It started to pull back and then it went down. Does anybody want to just jump in? Because what if it goes without you? What do you think? No, the only answer is no, right? We're developing trust right now. Look what happens. That market pushes a little bit and there's another reversal bar. Can't we start the process over? There's the window. Couple ticks below. The rules are still met, aren't they? We still have odds favorable momentum. We still have no termination conditions. We still have a reversal bar. And we still have a window of opportunity. And here it comes. I'm a tick or two below just to make sure I don't miss it. And now we're in a trade, guys. 39.91. We have the advantage of momentum. You have the advantage of a clear path. And you have the advantage of taking an entry where the market is likely to continue. And look at the window right now. By the time you get your pullback, guys, that's your window of opportunity. Your stop is probably up here initially. 10 to 12 ticks when you get into the trade. And now you're just waiting for a reversal bar. And there it is, right from the window. Your stop is reduced 2 ticks above. Guys, you literally have 4 ticks of risk on this high probability trade with the advantage of momentum, with the advantage of no termination conditions, and you just took an entry where the market is likely to continue. If you were in at 91, when you hit 89, you're already up $100. You hit 87, you're already up $200. There's 85, you're up $300. There's 83, there's $400. And guys, it just keeps going right to Fibonacci support. So your job in the beginning, you don't have to do this bar by bar, but if your rules are met on the 13.2 and you circle that tail, determine, did it continue from an area inside of favorable large triggers? And if it did, then you know you have a high probability trend trade. Take that picture, put it in your spreadsheet, and study those pictures every day. Make sure that you are comfortable with what you're looking for. Guys, your first 30 days is nothing more than identifying the best of the best entries. Easy enough, guys? Little overwhelming day one sometimes. But the reality is, if you get to this point to where you can study, and here's that tail picture one more time. We're not trading the tails, guys. We're using that as a study tool. If you wait for the tails to form, the market's long gone. You're going to be so good at this that you'll be able to predict those entries. You'll be able to predict where the market is likely to continue. You'll have an order waiting for it. And you'll have those three advantages that create a trade in place every time you do it. Uh-oh, Thala, you have a call? Yikes. I will go after your picture. When you come back, let me know. And I'll take care of your picture. Unless you've got 1 minute right now, I'm happy to do it. I'm sorry. Life happens sometimes, doesn't it? This is why, guys, I highly encourage you having children that are out of the house. It makes it so much easier. Sounds good, Thala. We'll take care of you. Feel free to send me a message, and I'll annotate your charts with my thoughts if you like later and get that back to you. Because, guys, that is the second half of what we do. We'll talk extensively about what we see in the market. We'll talk about the advantages. We'll talk about the rules. And then you're going to practice, right? You're going to simulate. You're going to look at what you see. You're going to take trades. And you're going to be able to determine whether or not those rules were met. And we're going to work through it together. And that's the second half of what we do. Guys, the one thing that I didn't do this morning, and I do every morning, and I apologize for this, is I check news. Every morning I check news. I make sure that we're not trading in anything crazy. Today's Thursday, March 23rd. At 8:30 a.m., we had unemployment claims. Didn't do a whole lot to move the market. At 10 a.m. today, guys, we have new home sales. I looked at my clock, and I had a big note on a piece of paper saying, hey, Mark, at 10 a.m., there's going to be a news. It may move the market. It may act erratic. It might make it a little bit crazy. Might be a good time to take a break. So, guys, every morning, let me give you the link. I go to forexfactory.com. and I check my news. I usually start class with that, but I'm doing different stuff today. So at 10 a.m., we're going to be aware. We're going to watch that market. Guys, this is the S&P. The smalls are breaking above the large. The large are wide. We have a clear path. And correct me if I'm wrong. Even while the bar is still forming, didn't it pull right back to support right there at large triggers? Pretty cool. Happens every day, guys. The key is being patient. This is crude oil. Looks just the same, right? You can't tell the difference. Is it crude oil? Is it the S&P? It doesn't matter. The patterns are the same. If I go back to 7:11 a.m., this was the beginning of an awful lot of sideways. Look at how that smaller, faster chart creates indecision, no rules met, keeps you out of some trouble. But if we back it up just a little bit, there's your pullback directly to support inside of favorable large triggers. So guys, give me a why. Odds favorable, breaking through the areas. There's a pullback, comes directly to support inside of those favorable large triggers. Every day, over and over, right? Every day, you're going to see this look. Every day, you're going to develop trust in this look. Adam P. Isn't that a 50-50? Haven't my small triggers smashed through that potential trouble spot? So what we have here is small triggers through, large triggers strong. This area has the potential to break. I have strong triggers. I have a very concise window of opportunity. And I have a divergence. And what Adam has just done is he's talked to us about a medium probability trade. Let's go through the process of areas breaking. Thank you for this, Adam. Watch this, guys. Price reaches resistance. Absolutely no trigger lines have broken through. We have a termination condition. No long trades. When the small triggers break through but the large have not, we get what's called a medium probability trade, a 50-50. This is an area with the potential to break because of the odds favorable momentum, but it hasn't broken yet. And then when both the small and large go through, then we have that clear path. So Adam, what you're looking at here is an area with the potential to break in the form of that divergence high. But with this much momentum, it becomes a game, not even a game, a matter of weighing advantages. So let's go through the advantages. I'm in an uptrend. I have odds favorable momentum. Here's my down. I have an area with the potential to break with momentum, but it hasn't broken yet. So let's go to my 5-1. I'm in an uptrend. I've got strong triggers. I've got odds favorable momentum. I've got a very concise window of opportunity. So we're looking at like 6-on-1, guys. This is a medium probability trade. This is a beautiful trade. I would never miss this trade in my trading plan. You might miss it in yours initially. Adam, does that make sense? Does that help a little bit? When the smalls break through, the area has the potential to break. When small and large break through, we consider the area broken. Yeah. So two types of trades, guys. We focus on the medium probability trade initially. Or I'm sorry, the high probability trade initially, when every indicator on every chart agrees. And then Adam, you helped us point out that ultimately you guys are going to find your way into a medium probability trade. And this is where most of your indicators line up for the trade. However, a small issue exists. In that particular instance, Adam, the small issue was a divergence high that had the potential to break, but hadn't yet broken completely, right? Well, and there's an easy way to go after 50-50 trades in the beginning, those medium probability trades. And I think that the key is in the definition. However, a small issue exists. One, notice that issues isn't plural. Just one small issue exists. So Adam, as you work into 50-50 trades, when the smalls smash through and the large don't, we have odds favorable momentum. And guys, I use that word smash because when you have an area with the potential to break, but it hasn't broken yet, you don't want to give up that advantage of momentum. Does that make sense, Adam? Our small issue here is that area likely to break, has the potential to break, but it hasn't yet broken, not quite a clear path. So it's okay to insist that your 5-1 entry is absolutely perfect, right? Because we don't want to create more small issues. We want to keep it limited to just that one. The one issue is the potential rather than the clear path. So on my 5-1, if I have no divergence, I haven't lost momentum. If I have a small window of opportunity, if my smalls are outside of the large triggers, my only issue, my one thing against all of the positives, Adam, becomes this area has the potential to break. And because it's medium probability, our chart reading identified the one area, the one small issue. We can manage it assertively by using, and guys, I love this. Do you guys remember the three divergence in one spot? Whoops. Adam, if we take that short at the perfect spot and we see a slowdown, we can manage that trade assertively. Get out of it, be aware. So smalls are through the area, the large are not. This one has the potential to break, but it hasn't broken yet, right? And guys, things that I notice is I'm not coming from a termination condition. I'm not coming from a Fibonacci area. We've been in an uptrend here in crude all the way up. This is a lower probability trade. It's a medium probability trade. This area has the potential to break, but it hasn't really broken yet. If I create my window of opportunity from the bottom of my triggers to the top of my triggers, my window of opportunity is really up here at the 1-to-1s inside of those favorable large triggers. It may go from here, but I'm piecing everything together using those rules to give me the best of the best advantage. Does that help a little bit, Adam? The nuances are repetitions, and that word nuance is very key. Because this is why I'm such a proponent of taking a million pictures and putting them in your room. Every time you take a picture, every time you annotate a chart, you're cementing those nuances, whether it's a certain look that you recognize, a pattern that you recognize, whether it's an entry that messes you up, whether it's an entry that brings you success. That repetition is key, guys. If you look at my library in in Snagit, this started in November. I'm at almost 3,800 pictures. I'm 4 months in, almost 1,000 pictures a month I go through. Almost 1,000 pictures a month of high probability trend trades, of termination conditions, of ways to manage trades better, patterns that I recognize on the chart. And guys, I save every one of those pictures and I'll go back and I'll study them. And it's that repetition that creates confidence. It's that repetition that has you going from I'm wondering how I should handle this to I have an exact plan of how I'm going to handle this. And that's what this class does. This class gives you the opportunity to be able to handle it. Guys, there is a pullback to support inside of favorable large triggers. And now we get those momentum losses, right? Those smalls return to the large, 2 divergences in the same spot. And that trade ultimately pushes down. But if you got in at the best of the best spot, you had an opportunity to make some money and then work your way out. So guys, that's what we're going to do. There's 1, 2, 3, 4 divergences in the same area. We'll see if it pushes lower. You're watching a fight. The triggers are up. Divergences say we may push. We can't go short. We don't have odds favorable momentum long. 90% of what you do is going to be sitting on your hands waiting for those advantages, guys. But when they present themselves, it's pretty awesome. All right, I'm going to take a minute. I'm going to let you guys watch the S&P. It'll be interesting to see what happens. When there's nothing to do, watch what happens. See what you recognize. If you're brand new to this classroom, do me a favor. Fire up your capture. Take a picture of your screen. Doesn't have to be a trade. Let me know that you can post in the room. That's one of the keys to what we do. And when I come back, I'm going to take a look at all these pictures that you guys have just posted. We're going to look at each and every chart. We're going to talk about rules. We're going to talk about what you did, what you were thinking, what you were feeling. And then we're going to look for things, areas to improve, or maybe you're just going to get an awful lot of praise. We'll see. I'll be back in about 5 minutes, guys. Post your pictures, ask your questions, and then we will resume. Remember, there is news in 2 minutes, medium impact news in 2 minutes. Let's see what it does to this market that doesn't have anything going on right now. Let's see if that news gets things moving. Back in just a minute, guys. While I'm back, this is a great example of the large crowd leading the way. Remember we talked about that when you guys are looking for trades, when you're making your decisions, allowing, sorry, my OCD just kicked in. Allowing the large chart to lead the way, allowing the crowd to tell you which direction we're going, following the trend, looking for the momentum, making sure there's nothing in the way. Your small chart was telling you down here, but your large chart remained green. All of your trigger lines remained above support. Everything on this chart said the market's likely to go up. Are you guys with me on this? So even with multiple divergences, even with a red background, even with red large triggers, the large chart, the general temperature of the market, was always to the upside. Guys, not fighting trend is one of the greatest things that you can do. All right, so when I scroll, guys, I'm going to start looking at your pictures. I want you to see this. I've got to scroll all the way to the top to get to them. So if you post a comment, if you ask a question, it may take me a second to get back to it. If for some reason I miss your question or your comment, if you don't get the answer that you were looking for, just repost it. It's never personal. It's just a matter of I've gone through so many things that I've missed it. Guys, Ron C. got us going this morning. And I love this. Ron C. has developed a plan. It's not a high probability trend trade plan. But there's two things that I know about Ron. The first thing that I know is that every trade that he posts is going to look the same. Every trade that he posts follows a very exact set of rules. A set of conditions must be met. And if they're met, he'll pull the trigger without fail. And his plan revolves around identifying momentum through the trigger lines, identifying a clear path, and taking little bites in between. It's a little bit different approach, but it's amazing. But if you look at the advantages that he had here, he had a termination condition that creates a full reversal. He has a full reversal that gives him odds favorable momentum, and then he just waits for areas to clear with all that momentum and is able to pick off a little bit on the way. Same thing here. Termination condition creates a reversal, creates odds favorable momentum, and he just takes just a little chunk right out of the middle. Eating that elephant one bite at a time. Ron, great trading this morning. Scrolling down, and guys, new users, when you see a trade, and I'm like, wow, that's a high probability trend trade. What a great look. It's okay to steal it. Put it in your spreadsheet. Ed, on the S&P, you have smalls below the large are wide. They're angled in the direction of the trend. It's a 50-50 trade. We have an area with the potential to break but hasn't broken. There's no divergence. And Ed, you're waiting for the pullback to resistance. I hope it got you and gave you a big winner. Gary, exact same trade. Gary chooses to take it at the lowest point with all that momentum. Remember that we are trading an area with the potential to break but hasn't yet broken. Guys, these are great entry pictures. These are great opportunities for you to go back and study the conditions with no emotion attached. The trade's done, right? It's there. You're good. You can see exactly what happened. You can look at the conditions. Did it give you what you needed? Ed, you got your entry with the momentum right from the area, and now we're just waiting to see if it decides to go down. And it didn't. That area with the potential to break didn't break. I'm going to scroll down real quick. And both Ed and Gary, hey, fella, great. I haven't gotten to your picture yet, so you're good. So guys, let's talk about it. And this is a great idea because what we're doing is we're seeing an extra chart, right? Here's the 21-3 chart. What's the 21-3 chart? Well, the 5-1 is to the 13-2, as the 13-2 is to the 21-3. Does that make sense? Initially, you're looking at two charts. And guys, this is why I teach on two charts. Because in the beginning, you've got to process all of this, right? You have odds favorable momentum, but we don't have a clear path yet. We don't have areas broken. The large triggers have remained above, the bottom or below. There's no divergence. There's a small window of opportunity. Guys, this is a beautiful shot at a medium probability trade. Give me a Y if you're comfortable with this. Our small issue is just like the one Adam pointed out earlier. The large triggers haven't broken. Guys, we don't have a clear path. That's the issue that we gave up. Everything else looks pretty good though, right? So this is a 2-chart look, and this is one of the reasons, guys. I see people using other charts and ignoring other charts. Here on the 21.3, guys, we have a pivot that's not coming from a key area. I don't have a strong top. My large are up, my small are down. I don't have odds favorable momentum. My smalls are kind of above this area, but the large are up and coming up right at a mid-band, right? The 21.3 doesn't say go long or short. It says you're right at a crossroads. So I'm taking a medium probability trade that's not supported by a higher time frame, and the likelihood of it working out decreases there. So what happens, guys, is if you're going to add charts, use them. Otherwise, it's just noise. If this is medium probability, this should be high probability. You had high probability on the small chart. It's a good look. It's a 2-chart look that's great, but you had information on that larger chart letting you know that that 50-50 was less than probable. So as we come through, Gary, let's see what you did. Same trade. The trade's so nice you post it twice. Got it. Bruce T, let's see what you did. Good morning, Bruce. Bruce, odds favorable, clear path, taking that Ron C method. Boom, boom. In after the problems with all the momentum, out before the problems with all the momentum. Bruce T, great trade. Ron took the same trade. Nice job, guys. Great look. Ed, you hate it when it happens first trade. Yeah, me too. You don't need a new rule, Ed. You just have to realize that it was a medium probability trade. And even if it were a high probability trade, not every trade's a winner, guys. Not every trade's a winner. And if anyone ever tells you that every trade's going to be a winner, run. They're lying to you. Shoulda, woulda, coulda. There was no shoulda, woulda, coulda, Ed. But I like the timeout. If you're frustrated, take a timeout. Turn from nowhere, turn from nowhere. Enter at the mid-bands. What'd you do wrong? Paul M., are you in the room? Paul's asking what he did wrong. I love it when you guys ask this question. Paul, can I give you the best answer ever? So here we go. You had odds favorable momentum, right? I love that. Rule number 1 is met without question. Are you comfortable with the idea of the 50-50 trade? That an area hasn't broken, but it has the potential to because of the momentum? Do you see how that takes it from high probability to medium probability? And guys, is everybody comfortable with that? This support hasn't broken. The triggers haven't gone through. This divergence low hasn't broken. The triggers haven't gone through. You had no divergence, which I love to see on a 50-50. Your areas inside of favorable large triggers were the mid-band right here. This one just didn't work. Paul T, you didn't do anything wrong. Paul M, you took a medium probability trade that didn't work. That's it. You gave your best chance of success on this entry. It just didn't work. But when a medium probability trade doesn't work, gets run over, That's the one that you have to avoid, right? Don't keep throwing money at something. You're on the wrong side of everything. Nothing rolled. The small triggers are against you. The first one I love. Take that medium probability trade. Commit to it. The look is perfect. Don't keep throwing money at a medium probability trade. That will drain an account very fast. Nice job. All right, Thala, let's see what you did. Thala, you have odds favorable momentum. Didn't get your pullback for the entry quite. I love the look. So Thala, what you're doing is you're doing a great job. Market's coming from a termination condition. Everything is pushing up. You do have odds favorable momentum. You do have a clear path. Are you good with the first two? Odds favorable and a clear path? That's the first two. You did great. So rule number 3 is the only thing getting you right now. What you've taken here is a momentum style trade. It's not a high probability trend trade. Right now, Ron is applauding you because you let it clear the trouble spot. Ron would have gotten in right here and taken chunks all the way up, right? But as we study the high probability trend trade, the only thing that you didn't follow as far as rules go on this one, and guys, I told you I'm going to praise you when there's praise there as well. The read was perfect, Thala. Initially, working on finding that great entry helps out. This may not be your trade. You may be more comfortable with Ron's type trade, that momentum style trade. But understanding these entry points makes trades easier to manage. And where you got in, right here, you had all the momentum in the world. You almost could have held that one all the way to resistance up there. Does that make sense? Not quite a high probability trend trade, but such advantages over here once those one-to-ones clear with that much momentum. Opportunity. Your trigger lines told you that we were probably going to the next level. So if you're focused on the high probability trend trade, the challenge was rule number 3. But from a chart reading perspective, you're embracing those advantages that are going to help you find success as you move forward. Refining that entry just a little bit is going to help you out. Initially, it's going to give you a higher probability scenario, an easier to manage scenario. Kulu, really, day 2? And you're already picking out smalls above the large coming up, pull back. I love everything about this. You missed all of it? Why do I feel it's not high probability? For me to define high probability, Thala, every indicator on every chart agrees. And I talk about it in terms of the high probability trend trade for the beginners, for the new users. And the reason that we focus on this is this has been back tested, forward tested, and put through the ringer and has been proven. It typically wins 70 to 80, and it's typically closer to 80 to 90, but I'd rather tell you that it's lower than that. What you're giving me here is a beautiful trade, but Thala, I don't have 100 pictures of this trade being executed exactly the same way to be able to tell you that it's likely to win more than it loses. Does that make sense? This is a little bit of a deviation on the plan that we teach. This is taking the software and doing your thing with it, which I love because it means that you're reading these advantages. But I don't have enough data to tell you that this wins more than it loses. And then second trade, you came right into a termination condition, right? 33. So this pullback was right here. The only thing that you didn't get was a pullback to the area inside of favorable large triggers. You waited for the pullback and then you got in and you had the clear path and everything was going up. So once again, it's just kind of rule number 3 on that one. Does that make sense? Awesome. Cool. And guys, if I ever say something that you're like, I don't even know if he was speaking the right language there, just tell me. I'll find another way to say it. I have to do that a lot, guys. I will play my man card. I don't communicate well all the time. Kulu, for the entry. Absolutely. That pullback to the area inside of favorable large triggers. And Thala, you don't have to do anything. I know that sounds silly. Thala, you may look at this market and you may say to yourself, guys, I am so stinking good at recognizing odds favorable momentum. I am so flippin' good at identifying that clear path that this pullback nonsense doesn't appeal to me. This is Ron's trade. Do you see it, Thala? It leads with odds favorable. It demands a clear path. When he clears the area, he takes a little pullback right to it and giddy up. Takes a little jump in, little jump out. Everybody's going to have a different way to do it. Everybody's going to have something that's comfortable, something that they see, something that they're comfortable with, and there isn't a right or a wrong. There isn't I always have to. There isn't a can I do this. This is absolutely beautiful. Ron is sending you private messages right now going, hey, great job. So this may be your trade, but it stems from odds favorable momentum and it stems from the clear path, Thala. Pretty much. You have advantages, right? So Thala, one thing that I might encourage you to do, because this appears to be comfortable for you, and there's a few people that love this, go back, and when I have this look on the 13.2, watch this, we can study this. When I have odds favorable and I clear the path, maybe you look for an entry beyond the areas. Maybe you look for an exit before you reach trouble and you're taking a portion out. That might be your trade. That might be your comfort spot. And it's not right or wrong, but it all stems from chart reading, and that's what I really try to promote, is your ability to take what the market's telling you and then find those advantages that make you comfortable. And since most people don't have a plan in the beginning, I provide you with that very simple approach, that very simple 3 rules on 2 charts approach. So at least you have something to do, something to look for in the beginning that has been proven to win more than it loses, that does give you those advantages so that you can feel comfortable, so that you can get to the point where you grow with the software. Kulu, are you in here? Smalls above the large. The smalls are above the areas. The large are not. No divergence. Strong triggers right at the area. And look at that thing rocket. And Kulu, you may not have known what you did here, but you waited for everything to agree. The pressure was up. You just waited for everything to agree and then took the absolute perfect trade. I love this trade. When everything on every chart agrees, guys, it's hard to go wrong. It'll go against you sometimes. Ed, everything says up, so you went short. All right. Need to become Spock-like. I'd love to see your rules for that trade, Ed. Smalls breaking above, everything says up, odds favorable, and now you're waiting for the pullback to the area inside. I know the rules for this one. I like it. Trend is your friend. Pulls right back to the mid-band. What happened? Ed, rule number 3, right? Area of support inside of favorable large triggers. You had a rock star entry. Don't be scared to let it pull against you a little bit, guys. You create a window from the top to the bottom. Don't be afraid to get in at the top. This is a matter of trusting rules, isn't it? When you trust the rules wholeheartedly, you take that best entry. That best entry creates manageable trades. This is Q27. Awesome. Are you using Q27? Are you using Snagit, or are you using the capture software? And I know that you're still working on the drawing tools. Capture, can I give you a little help real quick? And this is for everybody. When I click this red button on capture, if I hover over just one of my charts, it's only going to give me one of my charts. So Q27, one of the greatest things that you can do for me is click and drag from the upper left to the bottom right, and make sure that you get both of those charts on there, because what you're doing is you're giving me the absolute best information to help you out. And I'll throw a picture of annotating charts in the room as well. When I can see not only, whoops, where'd it go? When I can see what's happening on the 13.2 as well as what's happening on the 5.1, then we can start gauging. Was the momentum there? Did you have opportunities? Was the termination condition present? And then we can come over and then we can see it on the 5.1. From capture, there's arrows. Maybe you want to point out that they're losing momentum. There's shapes. You can identify windows of opportunity. And then, of course, the most important thing is the call out and just writing. Whoops. Writing your rules on the chart. Tell me the whys. Tell me about your odds favorable momentum. Tell me about your no termination conditions. But giving me both charts gives me an opportunity to give you a little better feedback. Does that make sense? I hope that helps. Because here I'm not sure. Maybe there was something going on the 13.2 that would have been a great little, hey, watch out, things aren't great. I like your entry. It's a little bit below those large triggers. And then when you get the third divergence, I think your awareness was perfect. If you took this trade, quick profits, third lower divergence, no reason to lose money. I think that you did it very well from what I can see on the 5.1. But that 13.2 might give me just a little bit of information to see if I could help you just a little bit further. Joel, that was definitely a pullback to support on a 13.2 chart. You're very welcome. Every trigger line is above the area. Isn't this just the recipe? I like that you did this, Joel. Guys, isn't this just the recipe for a termination condition? Price reaches an area of support. Absolutely no trigger lines break through. No short trades, right? Joel, that's just great chart reading. Just getting in there and saying, hey, this is what I see. And then I'm going to say, absolutely, you read that perfectly. Stephen F. 50-50 trade. Stephen F., are you in the room? Guys, I'm going to give you the answer that frustrated me in the beginning, but here's the reality. Where should the stop go? The stop should go where the market shouldn't, right, Stephen? I know that sounds silly, right? How do we determine where the market shouldn't go? Well, this is my area inside of favorable large triggers. So that's my window of opportunity. My stop's going to go 3 or 4 ticks above it. This one would have stopped you out at 5, 10, 20, 50, 70. And what happens here, Stephen, is you're getting in at this tight little window of opportunity on a medium probability trade. My stop is going maybe up here. If I was coming from a great top, I might put my stop above resistance because it may pull up to that 89.05 right here. So my stop might go up here. I'm going to say, you know what? because of the conditions, I'm going to put it where it shouldn't go, and it shouldn't go above this one. If it does, I'm out, right? So outside of that window of opportunity, and if we go back to the manual, when we talk about entries, a great way to just practice that or to watch it is here's your entry point. My ATM strategy has 12 to 14 or 12 ticks. I have 12 ticks in my ATM strategy. Every time I get into a trade, my initial stop, if I'm in at 21, my initial stop is 09, right here. 09 is an area of support inside of favorable large triggers. So my 12 ticks is literally going to become 14 or 15. Does that make sense, Stephen? I don't want my stop where the market is likely to continue. I want it where it shouldn't go. Yeah. John used to always tell me, he said, hey, Mark, put your stop where the market shouldn't go. I'm like, well, hell, I'm new. I'm trying to figure out where it shouldn't go. So outside of that window of opportunity is a great place to start. And sometimes if that window is so huge, it might not be worth the risk for you, but that's up to you. So for me, if I'm in this trade and it's only 50-50, I'm probably right above this fib. I'm looking at about 2.5 points risk. I hope that's helpful. All right, Q27. And there's that same trade, right? Third divergence pushes it lower. Ultimately, it ends up going, yeah. This happens sometimes. I think the fact that you came out of this with these three divergences, with those smalls down, with that trend change, you came out of this unscathed and money in the bank. Nice job. And then sometimes it just goes and you're like, oh, rats. All rats is a technical term. But the reality is we don't control the market, right? All we do is control our execution. Are we taking a trade that provides us an advantage? Are we taking a trade that gives us a statistical advantage every time we enter the market? Do I have odds favorable momentum? Do I have no termination conditions? Yes and yes. Do I have an area for entry inside of favorable large triggers? I absolutely do. That one didn't work out, did it, Joel? Joel, can I ask what happened after? Are you in here? Did anybody else take this crude trade? Stephen F., here's your lesson, right? And I don't know what happened here. Are you guys with me? Is the market coming from a termination? Well, there's a mid-band, there's support that held, triggers rolled, odds favorable. I like it. You guys want to play with me? Did we have odds favorable momentum? Smalls above the large are wide, they're angled in the direction of the trend. Can I mark yes on my checklist, guys? Rule number 1 has been met without question. Anybody? Okay. Thank you, Stephen. No termination conditions. Price didn't reach an area likely to stop the market. I have the advantage of a clear path as well, right? All right, I'm going to zoom in. It went directly to 70.90? 71.90 or 70.90, Alex? It went down all the way to 70.90? Okay, so let's look at it. Here's the top of my triggers. There's the bottom of my triggers. This is the area where the market is likely to continue. Joel has a stop outside of that window of opportunity. Can we agree that this was a high probability trend trade? I can check yes on every one of these, right? Thala, are you using Snagit or are you using Capture? So there's two options, Thala. The first option is that you put your fingers to work and you write that checklist on your chart on capture. You write your rules on the chart. Odds favorable, no termination conditions. Here's my entry inside of favorable large triggers. That's the first option. It's a little labor intensive, but the reality is, and this is for everybody, guys, if you take the time to write your rules, you begin to know your rules. You begin to embrace the language. You begin to embrace the advantages. You begin to really break down your charts and read them. Joel, was this a medium probability trade? Or was this a high probability trade? What do you guys think, guys? Medium or high? I feel like there's not an issue in the world on this trade. It's a high probability trade. Joel, if I take 100 high probability trades, 100 rules met checklist trades, I can feel very, very comfortable in the potential of winning 70 to 80% of them. Which means that I have to also be comfortable losing 20 to 30% of them. Guys, this is the trust part of what we do. I've policed myself with the checklist. I know that I had every advantage in place for a trade. I took the trade right where I was supposed to take it. It just didn't work. This is one of my costs of doing business. Joel, it's a great trade. It's a great read. It's beautiful execution. It just didn't work. And that's hard, isn't it? It's hard convincing yourself that it's okay to lose a trade every now and then. All right, Adam P., first trade of the day, 50-50, right? Missed a few that were winners, so you decided to take them. 50-50, divergence print, small window of opportunity. There's your lower divergence, tells you to get out. And then there's the revenge trade, right? Jumping back in from below everything. Yeah, you're doing great, Joel. Guys, that's the one that drains accounts. First shot, all day long, manage it with the lower divergence. It's a medium probability trade. Whose trade was this? Hold on, let me scroll back up. This was Adam P., yes? Adam, hopefully you're in here. Perfect entry. Does everyone see it? This is your goal. Don't stew. Let's just make it better. This is your goal, right? Nailing that entry because it makes it manageable. Watch this, Adam. When this reversal bar prints, your stop, especially on medium probability, is below that reversal bar, which means you literally have a few ticks of risk there. When this divergence prints on a medium probability, when you get a second lower divergence on a 50-50 trade, it's okay to get out. Take a couple ticks, wait for things to go back in your favor. And that's the hard part, isn't it? Because you want to win. You're like, man, I just want this one to win, and I'm going to keep bigger stops. And then you get upset that it doesn't win. You forget that it's medium probability. You forget that there was a pivot stop out at that resistance. You forget that there was a second lower divergence. And you say, gosh darn it, they need to give me a win. I'm guilty of this, guys. Yeah, Adam, on a high probability trade with absolutely nothing in the way, two divergences don't scare me so much. But on a 50-50 trade, at a pivot stop out, at resistance, this has a much lower chance of winning, doesn't it? And there's your 1, 2. Ultimately, you get the third divergence on a large chart, which is a big one. But look at how those large triggers just don't follow. They're so far away. It's a pivot stop out. It's a beautiful looking entry, and it's manageable, but it's not a high probability trend trade. Does that make sense? No, this hadn't printed yet, Adam. This third divergence didn't print yet. So in the moment, all you could see from a 13.2 standpoint is that we already had two divergences, and we're coming into that high for the third time. Large triggers hadn't come anywhere near breaking it, not even close, right? So we're looking at a pivot stop out on a 50-50 trade. So Adam, this is where your brain has to say this isn't a high probability trend trade. Totally cool. And then you have to have a plan for those 50-50 trades. For me, as a brand new user, I insist on the perfect entry. I make sure that there's no divergence on a 50-50. I make sure that it's a tight little window of opportunity. And I make sure that I have that strong trigger line. And I believe you had all of those elements, right? Except for the divergence. So there's one loss of momentum on an area that hasn't broken. There's a perfect entry and an opportunity to manage. And then that lower divergence, small triggers working their way inside. This is the deal breaker for me on a 50-50. Does that make sense, Adam? 50-50s are awesome trades, and they can be amazing trades, but they definitely require more assertive management. And one of the things that, yeah, when you look at it, keep taking them on sim, Adam, and go back and re-annotate the chart. I love going back and looking at still charts of my losers because I always see something. And that's that nuance that you were talking about. I always see something as I come back through. And it helps me out an awful lot. But I think your entry was Rockstar. And it created a manageable trade. That's the same one. And now the second half, no. And see, you made a mean face on this one, but this divergence didn't print till the market was all the way down here. Odds favorable, no terminations, perfect entry, Ziba. High probability trend trade, 100% by the rules. You know what, Thala, as I'm scrolling through, I'm realizing that I gave you an incomplete thought. And Joel, I think we already saw this one. Yeah. Ziba, what a great job that was. You know what? Let me do this. Why? Why would you cancel the trade? It's simulator, right? Psh, don't cancel it. Let it hit your stop. Put your stop in the right spot. Let it hit your stop. Ziba, if you get in the habit of jumping ship now, you're always going to jump ship, right? It's all right. Let's do two charts. And can we put the checklist on this one? I know you're creating a bad habit right now. Is the market coming from a good top? It's not, right? We're not coming from a termination condition. But that's okay. You had odds favorable, you had no terminations, and you had a beautiful entry inside of favorable large triggers. Ladies and gentlemen, this is your first 20 days. Learning how to find that perfect entry, right? Stephen F., why does it look 50-50 to you? Which area had the potential to break but hadn't? That's way too big. Hold on. Yeah, I think you were looking at the mid-band on the 21.3. And that's a great point again, guys. Remember when I said If you're going to have it, use it. This is a pivot from nowhere right into a mid-band. You have the area, but Ziba, perfect entry. Once you take it, your stop is where the market shouldn't go. And if you get stopped out, that's okay. Get accustomed to losing trades every now and then, guys. Get accustomed to being so comfortable that you're focusing on execution. And I love this phrase right here. When you stop expecting to win every trade, you start to win more trades. When you stop caring about the result, but you worry about the execution, you're comfortable in the methodology. Ziba, I love everything about it. Beautiful trade. Let them ride, guys. It's simulator. If you're scared to lose pretend money, you're going to be terrified to lose real money. Joel, I think we already saw that one. John, you took a momentum style trade, meaning that he had termination conditions on every chart. And because he had termination conditions on every chart, because he has a shift change, because everything is saying down, he's taking a shot at the short. Different kind of trade, guys, but very, very nice trade. And it becomes something that you have to manage. He takes a nice entry. He's got no risk at the first profit spot. And then, guys, once again, if you're going to have that large chart, use it, right? He says, whoa, we're still not strong down. Maybe I'll just hold on for a second. I'm not willing to lose on a trade where I don't have every advantage. Has to manage assertively. Tony the Tiger, trading great. Smalls below the large, larger wide, angled in the direction of the trend. First entry is awesome. Second entry still in the window. Nice little add-on. First profits at the first trouble spot. Zero risk. Tony the Tiger, everything about this is beautiful, isn't it? You guys see it? Odds favorable. Nothing in the way. Ziba, this was your trade. It comes up to the top of the window, works its way down a little bit. So from his entry, at the bottom of the window, 12 ticks keeps him safe, doesn't it? You got to let these things marinate. You can't decide that the trade is over before it ever has a chance to start. Nice job, Tony. And then John Novak. Good example of it, maybe worth one shot, but don't get married to shorts. Fighting that larger chart. Divergences on the 5-1 resume the uptrend. Great chart reading. Guys, we made it through your pictures. Wonderful job. How does that look to you guys? A little flat? You want to know how rules keep you safe? Watch this. Not a clear path, not a clear path, not a clear path, not a clear path, not a clear path. If you're following rules, guys, you didn't just get chewed up in the S&P. If you're following the rules for a high probability trend trade, if you're insisting that everything be right, that you have those advantages in place, you didn't just get chewed up. And what you're doing right now is saying for longs, I need a clear path to the upside, and for shorts, I need a clear path to the downside. Until that happens, I'm going to embrace my 90% of what I do is just reading indicators and wait for that breakout. Guys, it's going to break, right? You're going to get momentum. You're going to get a clear path. No, you're not an idiot, Ziba. You're new and you don't trust the rules yet, so you have fear, and that's okay. It's okay. You guys want to know how to work through simulator fear? I want you to go to Walmart and I want you to buy Monopoly. Okay? I want you to go buy a Monopoly board. And then I want you to take all the money in that Monopoly board and I want you to throw it in your driveway and set it on fire. Odds favorable, no termination. Window of opportunity. Guys, do we see it? Small's above the large, larger wide, nothing in the way. Here's my pullback. Here's my top of my triggers, bottom of my triggers. Squeeze it in. The only area inside happens to be a mid-band. Give me a Y in the room, guys. I'm not telling you to take a trade, but what I'm telling you is that if you're a high probability trend trader, your rules have probably been met. Meaning that you have the advantage of momentum, no termination conditions in an area where the market is likely to continue, and not one guarantee beyond that. No guarantee that it gets to the area, no guarantee that it's going to win, but if you're focused on execution, nice job. Take a picture. That's what we call a pre-trade picture. Put the checklist on it. See if it fits the rules. Yes, great termination. Yes, odds favorable. Yes, no terminations. Yes, area for entry. Guys, it's a high probability trend trade. All I am in control of is the execution, right? All you're in control of is whether or not your rules are met. The rest of it's up to the market. And we don't control the market. There is no courage without fear, says John Novak. I like that. Here's your crude oil. There's that pivot stop out. Everything pushes down. There's your entry at resistance inside of favorable large triggers. It overruns a little bit, comes all the way down, and then we get a divergence and it pushes up. Tries again, we get a second higher divergence, and then it starts making that move. They stuck, didn't they? Does everybody have this checklist? Can everybody print this out, put it on their desktop? And Thala, I apologize. I hope you're still in here. I half answered your question. I'm going to answer it the rest of the way. Thala was asking, how do I get this checklist onto my charts? Well, you're going to have to type it if you have Capture, guys. If you have Snagit, Capture's big brother with the bells and whistles. If you have Snagit, you can just drop it right in. You can't do that with Capture, I'm afraid. So if you're on Capture, you're going to have to do it the old-fashioned way, right? You're going to have to type on there. You're going to have to type your rules. Guys, Snagit's a $63 investment. I love Snagit. All right. How many of us are canceling our orders right now going, oh, it didn't get me? I can get you one, Ziva. Guys, with all those advantages, John Novak said, you know what? I'm willing to pay a little extra. I'm going to get in 4 ticks above the mid-band instead of waiting for 2 ticks because there's no divergence, because everything is strong. It worked out for you, didn't it? Nice trade, John. Here we go. There's that link to Snagit. Out half already. I love it. So what if you didn't get the first entry? Do you still have smalls outside of the large? Do you still have no termination conditions? Do you still have an area inside of favorable large triggers? You guys ask me about stop placement a lot. Can we agree that that would be a horrible spot for a stop if you were in this trade? We know that John's in the trade. Could we coach him? He doesn't need our coaching. He's out, and he's saying to himself, if this pulls back, the rules are still met for a high probability trend trade. I can't put my stop where the market's likely to continue. Which means that if I were a guessing man, he's either somewhere down here Jerry, you're long at 19. Pull back to support inside of favorable large triggers. Guys, I never try to put juju on anybody. Smalls are through, large are not. Jerry's been with us a long time. He knows how to read a chart. There's the rest of the scene. Takes the pullback. Second lower divergence. Small triggers are still outside. Pushes it a little bit. And then there comes the opportunity. Nice job, Jerry. Ed, everything says up. You take the John Novak entry. And you take your money. Nice trade, Ed. It's hard to feel bad about $300, isn't it? I love this, though. Momentum is amazing. Direction, no terminations, areas to bounce, triggers up. Every chart agrees. Guys, what do you suppose it means when every chart agrees? John's holding for... John, are you suggesting that you're using Fibonacci resistance as a target? With odds favorable momentum, with a clear path, with everything facing the same direction, you can create an educated guess on where the market is likely to go? I feel like you could build a trading plan around this, couldn't you guys? Nice trade. So Ed, now you have to say, I'm okay with the $300, but with this much momentum, I probably could have made more. But when you lose a couple, it's hard to stay in a trade, isn't it? Joel, 50-50, great entry, small stay outside, right? $50-50. You did have divergence. Great entries make manageable trades. Nice one, John. Ed, that was nice of you. And I like this. You put the stop where the market shouldn't go. The small stayed above the large, so you held on for a big move. That's a great read, Joel. Smalls are still outside. Smalls are still outside. That's a beautiful read. Filled on the high tick. Lucky is good. Great job, guys. Smalls above the large. Large are wide. Angled in the direction of the trend. Guys, look at that. Didn't it just pull back right to an area of support inside of favorable large triggers? Didn't we already get a reversal bar, so your risk is already established? Probably 2 ticks, maybe? It's still a 50-50 trade? Ziba, did you get it? Odds favorable. Perfect entry. Stop where the market shouldn't go. Didn't cancel, still waiting. Nice job, Ziba. Let's see what happens, right? Ziba, Did you move your stop below the reversal bar so you have virtually no risk on it right now? Remember, now it's managing. Gary, beautiful. You got that entry. Took it all the way to the targets. Nice job, Gary. Isn't that amazing? Momentum, direction. Great entries make for great trades. Ziba, nice job. Gary, great trading. John Novak, awesome trading. Joel, great hold. Ed, awesome entry. This is all we do, guys, every day. Ziba, you have to manage your trade. I can't do that for you. Let's talk about it. What do the triggers say on the 13-2? Do the triggers say up with momentum or do they say be careful? They say up with momentum. Have we reached a key area? Nope. You've already got a stop below the reversal bar, right? Your small triggers are outside of your large. Ziba, if you took profits at 40, if you made $100 on the first one, break even puts you at an area of support inside of favorable large triggers. But what does the 13-2 say? It hits your first target. Awesome. So answer, guys, you have to talk yourself through this. What does the 13-2 say? It says up. Is there a big red line on your chart that might be a great second target, Ziba? Missed it by a tick, right? 13-2 says up. 5-1 says up. Same trade, Tony, 50-50, no divergence, perfect entry. Everything says go, and you're going. So we identified where the market is likely to continue. We identified where the market is likely to go. You already hit your first target, Ziba. It's appropriate for that 22 stop to be at 28. Just below that reversal bar, right? And now everything says up. You've already made money on the first one. Go break even. And you are an hour behind, and that can affect fibs because you have a different midnight than the Nexgen server. Some people have to keep their computers. No. Why would I say that? Ziba, I won't tell you how to manage a trade. I'll tell you how to read your indicators. Here, everything says up, right? Everything says up. Your smalls are still outside. But Ziba, you've already made $100. Yes? Are you really willing to give back $120 at this point? Or is it appropriate? Risk a couple ticks when everything says up, be below the reversal bar, and see if it hits that next target. But you've got a big red fib right here. Just see what happens. You're on simulator, right? And you're going to be able to go back and annotate the chart. What does the 13-2 say? Guys, I want you to get in the habit of saying that. What does the 13-2 say? 13-2 says strong. 13-2 says up. I've got no divergence on the 5-1. And I've just hit what would be an appropriate target, right? Fibonacci resistance. Let the 13-2 triggers lead the way, guys. Let the 13-2 triggers lead the way. And for those of you that are studying, what happens when I circle that tail? Support inside of favorable large triggers. What happens when I circle that tail? support inside of favorable large triggers. Kulu, where the market shouldn't go. So let's talk about that. Nice, Jerry. Ziba, you took the same trade as somebody with 10 years experience. Nice job. Why is somebody that's been trading that long taking the same trade as somebody that's brand new? Because it works. So Kulu, let's talk about, and it's a great question. And Ziba, this is for you too. Guys, we spend an awful lot of time talking about entries, right? We spend an awful lot of time talking about where the market's likely to continue and being able to take advantage of that. That's your first piece of the puzzle, is getting into the trade. The second piece is learning how to manage it. So initially, a mechanical approach, one that eliminates emotion or opinion, right, tends to be the most straightforward approach for new users. And you can alter your plan after you're done with the education. As you learn to read your indicators more, you'll be able to change that plan, guys. So Kulu, Ziba, Thala, Jar Jar, and anyone else that's new. We're going to talk about the most mechanical, pragmatic, opinion-free approach. If you trade 2 contracts, the initial stop will be 12 ticks, and then it'll be adjusted below or above the window of opportunity. So Kulu, very pragmatic, right? Where's the window of opportunity? It's inside of those favorable large triggers. So your stop beginning is outside of that. If you trade 2 contracts, you've got 2 on. Once you get that reversal bar, Ziba, put it 2 ticks behind the reversal bar. First profit target at 100. If it's hit, move to break even. Let it run. The second target will be 200. Guys, this is 100% pragmatic. There's no emotion. So Ziba, if we take your picture, if you're in at 34, and Kulu, you are absolutely right on 16. That initial stop has to go where the market shouldn't, right? And there's a little extra risk on this one. Has to go down here. This is outside of the triggers, but all of your areas are up here and very consolidated, so you can really, let me make this bigger for you guys. You can see, Kulu, initially, we're well below those areas, right? We're making sure that if the market goes past this mid-band, if it goes past all these areas of support, all the way down here, we don't want to be in that trade anymore. Once it moves in the direction of the trend, we're going to move it a tick or 2 below that reversal bar. And then you're great. Once the first profit target is reached, that stop gets moved to break even, if I can grab it. So now we have absolutely no risk on the trade. We already have $100 in the bank. We didn't have to do any chart reading in order to do that. All we had to do was follow the plan. So guys, these pictures are right inside this PDF. Let me give you the PDF. Here's your entry. Your initial stop where the market shouldn't go. Your first target, your second target, that 100% pragmatic plan. Once you get a reversal bar, the initial stop gets moved just above it, and there's nothing to do now. I'm either stopped out or the trade hits my first target. The first target is hit. I move my stop to break even. And the only thing that's going to happen, guys, is either going to hit my second target or I'm going to get stopped out break even on my second contract. And then the second target gets hit. Does that make sense? So Ziba, wouldn't it have been awesome to have a plan in place to reduce your risk, to get your first target? And then Ziba, we had Fibonacci resistance here on most everybody else's charts. 48, 49 becomes a beautiful target, doesn't it? Good morning, Abdul. And because no trigger lines break through the area, it becomes an area likely to stop the market. So we knew getting into the trade exactly where we wanted to take profits. Guys, this is what we do every day. Just working through it. Ziba, that was a beautiful trade. And your entries have been spot on today. So now it's time to just start working on that management, right? Incorporate that very basic management plan and practice it. Everything says up. Joel, you missed your entry, Joel. I'm not sure why. But I'm guessing that this was activated after this pivot already happened and you were hoping that it would come back and get you a second time. Otherwise, you should have been filled, right? And guys, that's one thing that I'm going to notice. I'm pretty good at this. If you show me an entry at the absolute perfect spot that the market ran through 2 or 3 ticks, I know that you put this there after the fact, right? The same reason if you show me a great winner, but you're down $1,000 in your P&L, I know that you're not showing me losers. I pay attention. So Joel, you were still reveling in the success of this one, right? And you missed your best entry. I've done that. Doing the happy dance so much that I forget to keep my head in the game. But your entry was right there, Joel, right there at 33, 34. And then once that goes away, it's really not your trade anymore. Great job. And Ziba, perfect. Focus on your management more. Your entries are great, so now we're taking that next step, right? Your entries are amazing. Guys, great entries make manageable trades. So now, Ziba, one thing that you can do, and guys, I love it when you do this, is go back to this picture, right? Isn't that a great entry picture? Everything agrees. Take your picture and watch this. Talk about your stops, talk about your targets, talk about everything that you have, and then go to your next picture when it started to move in the direction of the trade. And Ziba, take another picture and say, this is where my stop should be, not down here. Once my first target is hit, my stop should be at break even. So you can go through and annotate after the fact and kind of rebuild those good habits and say to yourself, where was my initial stop? Where should I have put it? How could I have done this better? With this much momentum on the 13.2, doesn't it make sense that I'll make it right to Fibonacci resistance? Guys, that's how management plans come together. It's just a bunch of if-then. If this happens, then I'm going to do this. If this happens, well, then I'm going to do that. Great job, everybody. And Ziba, wouldn't a break-even stop have been wonderful? You would have had $100 instead of giving it all back. That's okay. And guys, I say this a million times, and I promise I mean it. New users, that's what I want to see. I want to see perfect entries. You're going to learn how to manage them. You're going to learn how to manage perfect entries. And until you know how to manage perfect entries, guys, once again, I gave you everything you could possibly hope for. Here's the most mechanical approach that you could ever take. Right here on this PDF, download it, save these to your spreadsheet, and practice them. every day. Stephen F., we already talked about this one. Did you mean to double up on it? $12 to $14 ticks initially, and we just talked about the whole management plan as well. Sometimes it sticks to your clipboard. I do that. Zeba. Are there videos? Come on now. You know there's videos. Let's see. Let's do, of course there are. Have you met John Novak? Ah, where did his video go? There we go. Trade entry and exit management techniques. I was like, I know it's here. Let me give you that link. There you go. It'll talk about both entries and exits. And then, Steven, you see termination conditions, but the trade worked? 50-50, right? It was a 50-50 trade. You had divergences, but it pulls right back to support. It's a medium probability trade that worked, right? Thank you, Ziba. That's okay. You want to know the truth, Stephen? Can I be completely honest with you for a second? I wouldn't have taken that trade either. And you know what stinks? Is I have to be okay with the fact that it worked. But you know what the second part of that one is, Stephen? Is I wouldn't have missed the second trade. This one right here, I wouldn't have missed that trade. So it's okay. I would have missed this one and I would have been like, oh man, here it goes. But there is no way on God's green earth you could have kept me out of that trade that everyone else took when it was odds favorable and a clear path and a beautiful pullback to an area of support inside of favorable large triggers. And guys, this is the key to study, and this is why we do it. This is why I give you guys this spreadsheet with 130 examples of high probability trend trades. It's not just to keep you from taking losers, right? It's to make sure that you're not missing the winners. Adam, tough day, all losing trades, managed incorrectly, then you walked away to cool off and missed two perfect. Isn't that Murphy's Law? It's like they have cameras in your office sometimes. I did it. I started my day with two losers today, guys. True story. Horrible result. I don't like losers, but I'm okay with them. Perfect execution, though. And that's just a part of it. And sometimes you got to walk away. Guys, trust comes through repetition. I just gave you guys all my copy here. Click on these. Tonight, when you go home, click on these. What do they look like? And look at that. The one that I clicked on didn't work. Odds favorable. No terminations. Strong triggers. Tiny window of opportunity. And Adam, here's your lesson on it. Reversal bar in the direction of the trade. Zeba, do you see it? Look where the stop was. Just below the reversal bar. Taking what could have been a 12 to 14 tick loser and making it a 2 to 3 tick loser. Entries first, management second. Awesome. Hit them straight, Steven. All right, Abdul, you say you're not proud of your trading today? How many charts do you need to do it right? All right, Abdul, Are you with me? Let's talk about them. All right, so I'm going to start at the first one. Pivot not coming from an area, right, Abdul? Let's start with your 21 chart since you have it. Pulls all the way to the midband in an uptrend, right? Isn't this a normal expectation? Pivots from nowhere reach a midband. Just like pivots from nowhere reach a midband. Pretty cool, right? You're seeing it both directions. So you're looking for an edge trade directly into a midband with the potential of holding. You do have odds favorable momentum, but wouldn't this be considered a 50-50 trade at best, not a clear path? We're just going to break it down from large to small, and this will help you think about it. Because what you're doing is you're saying, man, this red line should hold because these have strong triggers, right? That's the premise for a 50-50 or for an edge trade. But what's really happened is you're expecting a red line to hold, which is the same red line that only has the potential to break, into a midband that's very likely to hold because of that giant uptrend and the pivot from nowhere. Does that make sense, Abdul? I see where your head was. And then let's talk about your entry. You're fighting momentum, right? It's a 50-50 trade to the upside. You're fighting strong triggers, and at the time of your entry, everything's rolling and your market is already giving you a high volume area to the top. Edge trades, Abdul, well, it was confirmed by a market flow signal. Were the rules met? Or are you trusting this one bar on a tiny little chart to beat these triggers? Are you trusting one to beat all of these triggers? Are you trusting one bar to beat the midband? That's a lot of trust in one bar, isn't it? So what you had confirmed by a market flow signal, Abdul, is a little bit of flawed logic, I think is the best way to put that. In edge trade, you're still fighting, right? You're fighting trend, you're fighting momentum, you're fighting trend, you're fighting momentum. You're on the wrong side of everything. I understand why you did it, but I think that your 21 gave you a 50-50, and your 13-2 gave you odds favorable against it, and your 5-1 said everything was going up. And then market flow even said that we're on the wrong side of everything. Probably not a high probability. Does that make sense? It's hard to see in the moment sometimes. It really is. If all I had were trigger lines and couldn't see any areas, I could get on board with this trade. Does that make sense? If I didn't have this fib right here, and the mid-band was maybe down here, I could get on board with this trade. But because this creates challenges, this exasperates the challenges, this reinforces the challenges, and being on the wrong side of everything really confirms the whole thing. So this bar becomes not a signal because I don't have solid look. Great job, though. I like the process of your thought, and I'm just going to give you a little bit, maybe that'll help. And then it did exactly what it was supposed to do, right? And that was that 50-50 trade that ultimately worked. And then on the next one, you said trend trade long. So your 13-2, where's your 13-2? All right, so your 13-2, Abdul, do you have the advantage of momentum? And let's just walk through it again, right? Smalls are below the large, the background is red. I don't have momentum at all. In fact, I have very much the opposite of momentum. I'm below everything. The trend is already down because the smalls are below the large and there's zero momentum there. I also have large triggers down. My synthetics are starting to turn against me. I don't have an area inside of favorable large triggers, right? And once again, you're counting on market flow to outweigh all of your analysis. Does that make sense? I hope that makes sense. You're counting on market flow to beat the trend, to beat no momentum, to have absolutely no rules met for a trend trade. But because you saw this antenna bar, you said to yourself, man, I'm going long, right? Does that sound about right? Because it sounds about like what I did. I would get so focused on waiting for a signal that I'd forget to wait for rules to be met. That's me. Not everybody does the same. Pretty much. You're fighting the 13-2, right? In both trades, you fight the information that the 13-2 gives you. You know, it's funny because I sent my brother a message this morning, and I said, as long as you're with momentum on the 13-2 and you're with direction on the 13-2, and there's nothing in the way on the 13-2, so that's when you can start fudging on other charts and get a little creative. But the second I start fighting trend, the second I start fighting momentum, Abdul, for lack of a better phrase, I get my ass kicked 10 ways to Sunday every time I do it. And I probably have 1,000 pictures of me taking that beating fighting the 13-2. Downtrend. Wait for shorts, right? Uptrend. Wait for longs. If you weren't so hell-bent on selling that resistance, you might have caught that long, right? That's okay. Eventually, you get so tired of losing that you start following the rules. This is true for me. This is true for everybody. But what you're doing right now, Abdul, is you're just out there. You're reading a lot. You're doing a great job reading your indicators, and you just have to kind of refocus. And I can tell you with the utmost confidence, if you let every trade start with what the 13-2 is telling you, things tend to work out pretty well. Look at that short when everything says down, and look how it dropped all the way down. Great opportunities. Once you lost the momentum, no reason to hold that long. Everything set up, and the market went up. And it's this weirdest phenomenon, and it takes a minute to believe it. Great job, though. Great job posting and asking. Does that give you a little insight? Sometimes you have to hear it. I used to trade in determination conditions, and it finally took John Novak looking at my charts going, Mark, seriously, how many times are you going to do that until you get the lesson? It's like, I don't know, John. I've probably got about another 1,000 in me. And I did on Simulator. I kept doing it. You're welcome, Abdul. Thanks for posting. All right, Adam, can we talk about the logic behind starting with 2 contracts? Aren't you risking 240 to make your first target of 100, or even a full winner would be actually 240 to make 300? That's not the 2-to-1 risk to reward industry standard. As a beginner, taking a 240 loss is hard for you mentally, as only taking 120 is easier to swallow. Are you ready, Adam? The logic behind 2 contracts, are you ready? Because I love this question. The logic behind 2 contracts is as follows. Your first job as a brand new trader, learning the software, learning to read the indicators, is entries, right? And guys, this is for everybody. And Kulu, you're right. You did the math. The idea, Adam, is that you can find the best of the best entry, that you can get it at the correct spot so that you can reduce risk, so that you can maximize your profit potential. Are you comfortable with that side of it? And I say this a lot, guys. Your first 30 days is just entries, right? If we looked at Ziba's, Ziba, I'm going to put you on the spot real quick. If we look at Ziba's entry, it creates an opportunity for profit. It creates an opportunity for quick. And then that break even, it's a $100 trade, right? But look at that entry. So that's always my goal for you guys in the beginning, is let's get that perfect entry and create a manageable trade. And the reality is managing your trades comes from the ability to read your indicators. Let's see if I can zoom that down a little bit. But in the beginning, nobody's super proficient at reading their indicators in the beginning. So Adam, if you're focusing on those best of the best entries, if you're focusing on a trade that typically wins more than it loses, what you're doing is the entry creates a dopamine kick. You're like, yes, I nailed my entries. I got this. I was able to pinpoint with unbelievable accuracy where the market is likely to continue. And I know that typically 7 out of 10 times, this one's probably going to work. So the next thing you've done is your initial stop is 12 ticks where the market shouldn't go. Absolutely, right? And you're like, man, 240, that's crazy. But you're on simulator. All you're practicing, Adam, is entries. All you're doing is practicing getting the best of the best at that spot where it's likely to continue. That 12 ticks keeps you safe. It keeps you from getting out of a trade too soon, right? It keeps you from forming an opinion. It just puts it where the market shouldn't go because you're focusing on entries. That $100 first profit target, why did we do that? Because if you're following the rules, Adam, the odds of you hitting $100 are pretty good. The odds of you nailing that $100 profit target, watch this in this picture, it happens typically in a bar or two. It's so fast. And once again, there's that dopamine kick. There is that, yes, money in the bank. Here I go. This feels great. And that second target of only 200, it's an arbitrary number. You don't know how to read your 13.2 yet, right? You're not trusting the momentum. You're not trusting the clear path. You're still getting in this. You're learning your entries. Well, the odds are favorable that you're going to hit $200 on a high probability trend trade. You've already got the dopamine kick from making 100. You have absolutely zero risk. And what that 200 target does, what that zero risk does, what that $100 in the bank does, is it allows you as a brand new user to just sit on your hands and say, I don't have a darn thing to lose. I'm going to let this one play out. Does that make sense, everybody? This is mechanical and pragmatic, and it revolves around the best entry. But I want you to see this. And I love industry standards. 2-to-1 industry standard. When you guys learn to read your indicators, when you look at your charts, what did we do when Ziba was long and we were talking about it? Didn't we keep saying over and over, what does your 13.2 say? What does your 13.2 say? 13.2 still says up. 13.2 still says momentum. 13.2 still says we're going to that next Fibonacci area. Adam, suddenly that $200 target becomes a $600 target. Suddenly your first target isn't necessarily $100. If I'm taking this trade, well, then maybe my first target becomes that divergence low because it may create problems for me, but my second target might be 10 points away, right? So Adam, I agree 100%. It doesn't fit the industry standard, but it is an approach to take out emotion, to take out opinion, to keep you pragmatic, so that if you take a trade, and this is medium probability, right? Small's below the large, large are wide, they're angled down. You guys remember this one? Pivots that come from beyond Fibonacci areas. 50-50 trades are less inclined to work because that mid-band may hold for continuation up. And they may be trying to get to 40-50. Divergence prints. So if I did get in, let's say we're in at 49, 29, 29, 50 or whatever. Let me draw a line. And guys, this is a medium probability trade from a bad top. This one's not in my plan for entry. But if we're in at 29 and a quarter, we only have to get to 27 and a quarter. One bar down to get profits. Do you guys understand why this doesn't fit my plan? Because the pivot from beyond areas, that mid-band creates a great bouncing point. I've got areas that aren't broken. Oh, no worries. Man, go to the batting cages. Swing a bat. Get it out of your system. I've had those days. We've all had those days. Guys, chart reading told me that it wasn't a good top. Chart reading told me that the 50-50 was less likely to work, which meant that I didn't have to get in here and take this trade. This is a good lesson. Divergence said it wasn't perfect. A bad top said it wasn't perfect. Patterns let me know that when it exceeds and pulls back to the mid-band, it likes to continue. When it exceeds and pulls back to support, it likes to continue. Straight from resistance, right to support. Doesn't make it, pulls back to resistance, finishes the move. So guys, we start seeing this pattern over and over where we can create expectations based on patterns. And it doesn't mean that there's a long trade, but it means that this short trade becomes very low probability. Pretty cool, right? Does that make sense to everybody? Why do we have a wacky management plan in the beginning? Because guys, managing trades requires the ability to read indicators. We're working on that skill set right now, right? We're working on that skill set to read the indicators. We're working on the skill set to manage trades. And once again, if you go to the spreadsheet, this will be the 4th time that I've put it in the room. I hope you guys are stealing this thing. This is my personal one. Under management things, every trade has an opportunity management if you make it one. When to hold for bigger moves. When my 13-2 triggers are outside of the large, it says let that last one run, right? So I'm creating a management plan. Here's another one that says when to hold. When the small triggers are outside on the 13-2, I'm going to hold for bigger moves. So guys, I'm creating a management plan based off of great entries. When to hold the second contract. When the small triggers are outside of the large triggers. Giddy up, hit that fib, right? I'm annotating it every time. My management also, don't put an exit where an entry should be. Guys, management's the one that's going to work you. Management is the skill that you have to develop from those great entries. And I just looked at the clock. It is 11:35, isn't it? Holy smokes. What do you guys think about this? Anything can happen triggers. Right at a divergence high. None of the triggers break through. No reason to go long, right? Give me a Y if you recognize. Rules not met. Absolutely no reason to go long. Looking to see where we're at. That's the plan. Guys, I'm going to take a few minutes. When I come back, we'll finish strong. If you have any questions, post them in the room. If you have any comments, post them in the room. If there's something I can help you with specifically, post it in the room, and we'll talk about it. And we'll make sure that you are comfortable. And then we will shut it down, and we'll come back tomorrow and do it again. Guys, I'll be back in just a minute. right, let's finish strong. 10K, whiplash. Here we go, let's take a look. All right, so I got in at the fibs after the synthetics crossed above. I don't see the something at 50-50. Added on more double after the reversal bar in the 8 range, managed it to 13, 21, 13. Stayed 2 ticks below the tail on the 5-1 chart. Expected to go to 78, but got out as planned. All right. Basically, you took a you traded into a termination condition, right? Let's go through. Small's above the large, larger wide, angled in the direction of the trend. Everything's going. There's that termination condition right at 50. That was a target for a lot of people coming up, right? So here's the thing. When it pulls back to support, the large triggers don't flinch, right? The small triggers are still above the large triggers. If nothing else, you're anticipating a retest with all that momentum screaming up. Safe to assume? At least expecting a retest of 50 with all that momentum. Probably what got you in here. Yeah. So you get in at the support, likely to hold. It's not a high probability trend trade. You're anticipating a fib to hold. And the real question I would ask here is, was the 21-3 screaming in the direction of the trend? Not screaming? Whoops. I think I have a 21. Let's see what it looked like. So at the time, whoops, you got in right here. Let's put that over. So let's see what we had. We had odds favorable momentum, everything up, mid-band likely to hold from a bad top. Are you with me so far, 10K? Triggers roll above support, smalls break above the large. This is that great beginning momentum, which suggests that this area is likely to hold, which says that this area is likely to hold. So you just said, all right, I'm going to get in at the area likely to hold. Yeah. The 21-3 said we were going up more. The 13-2 trigger line supported it, and you waited for the 5-1 so you could get a good entry. I don't hate the trade at all. Abdul, are you in here? This is a great edge trade, taking it with everything going in the direction rather than fighting against it. Remember, Abdul took that edge trade, but the difference was he was fighting that 13-2 momentum. So you're taking the direction. I like it. One thing I like, especially if there's no divert, exactly. Just jumping in at the blue fib is tough for me. I know you're using market flow, right? Waiting for a market flow signal, or at least waiting for some sort of bar in the direction. There are some people in the past that would wait for a close on the correct side of the small triggers, just letting those bars get back to the other and getting on the business side. I like the trade, 10K. I think that you did a great read using all the charts. And because you were using all the charts, you could identify the advantage. And when you identified the advantage, you took it from the area where it's likely to stop. And you managed it appropriately all the way up to that area. And then when you got divergence here at the pivot stop out, you said, all right, I don't have to hope anymore. I think it's a great trade. Here we have a 50-50 trade, right? No divergence. There's your entry. Stop keeps you safe. First target down here, divergence prints on a 50-50. Lets you get out. Yeah, just getting out when the divergence prints. Great trade again. Nice job. And then everything says down, no divergence, pulls back to the mid-band. First target, second target down here at 27. And this is you right here. And 10K, isn't this just another example? Pivot from beyond the area, pulls back to the mid-band, doesn't flinch a bit, and finishes the move to the next key area. Nice job. I'd say great trading. I'm not sure there's any whiplash there. I think that everything you did revolves around great chart reading. Gauging the advantages, trading with the direction, looking for the momentum, getting in at the areas, creating manageable trades, and then having a plan for exit if the conditions change. 10K, that's what professional day traders do. Chat knows the rules. That's kind of cool. Look for price, manage risk, set profit targets, trail your stop, repeat the process. Yeah, for sure. Bobby T. Oh, Bobby T's getting on the boat. Quick little entry and exit. Said, whoop, wait a minute. I've done that one. 50-50, right? Is the market coming from a good top? Nope. Doesn't that kind of throw a wrench in the plans when you get to this mid-band? 50-50. No divergence unless strong market flow. Did you have the strong market flow, Bobby? Probably in this instance, huh? Yeah. Were you here for when I was talking about it? Probably not, because you were trading it, right? When you come from a pivot that's not in an area, and I'm getting these 50-50s and I've got a fib and a mid-band, the likelihood of these working without pushing a little higher is typically pretty slim. Once it pulls up and hits this resistance and nothing flinches, there it is right there. Then we get to the business side of things, and it never really gave an entry. But for me, if this doesn't come from an area, I'm very leery of 50-50s right there at the mid-band. Does that make sense, Bobby? And that's okay. And a great lesson that I got a long time ago from a guy that I'm not going to say is really smart because he may or may not be my brother. Let's call him Jay Novak, so you guys don't know who I'm talking about. Or no, you guys are going to figure that out. Let's call him John N, so you guys don't know. He told me, he goes, hey, where are you coming from? Where are you coming from, Mark? Are you coming from a great termination condition because it affects the quality of the trade? Are you coming from a bad top because it affects the quality of the trade? So I've been able to incorporate that. And these are the 50-50s that I really focus on. And these are the ones that I'm really willing to miss. And I'm looking to see if I have the 50-50 picture that he gave. Because he has a great 50-50 picture that talks about where it's coming from and what you're looking for. And it just kind of lets you wait. Gives you that little bit of patience, right? Ziba, you had a pivot stop out. You have a 50-50. It's not from a great top. You've got your entry, right? You got your entry already? Awesome. Now you're managing it. So it's a 50-50 with divergence, right? Medium probability. What do you mean it looks like it's not hitting? Did you get filled? No? Okay. It may not. You're not in control of that, right? It either does or it doesn't. Did you take it from the lowest point of resistance inside of favorable large triggers? Yeah, you were there, huh? I had Fibonacci there, and it went from the Fibonacci. It went from the lowest point, and there it goes. But Ziba, once again, it's a perfect read. Great momentum. Perfect entries create manageable trades. You're welcome. 10 km, if there's no divergence and the 21.3 synthetic favors enter at the 15.3 mark. If divergence, then skip it. Always 25 ticks. So what you're saying that is if the 21 says we're going down and you pull all the way back to resistance and absolutely nothing flinches and the smalls remain below, it typically gets you to the next termination condition. Sounds like grade A baloney, doesn't it? Let's see what the 21 said there. And I'm just kidding. It's not grade A baloney. So your 21 had the smalls through. It was a 50-50, right? The large were above. It's a bad top, but divergence prints. Maybe going down. Take care, Ed. So momentum on the 21. Momentum on the 13. There's your sticking point, right? It's the same on every chart. Nothing flinches. It comes down, hits that bottom. Divergence prints. And I like this one. 10 km, do you recognize this? So now it's a 50-50 trade on the 21. Does everyone see that? 50-50 trade on the 21. Give me a Y if you guys see it. This is why we teach on the 13 too, guys. There's more opportunities. But let's walk through it the same way we would if it was a 50-50 on a 13-2. 50-50 here, strong triggers. Everything says down. No divergence on the pullback to resistance. Medium probability trend trade using higher time frames. And then when divergence prints on that 50-50, it creates an exit opportunity. Guys, it's using a large view, and then you can capitalize on a smaller chart by reducing your risk. 10 km, that's some amazing chart reading coming through. And these one-to-ones told you when the party was over, didn't they? Price reached support and absolutely no trigger lines went through. Who took the short here because they thought they were missing something? Anybody? Some of you did. It's okay. So guys, once again, 50-50 trade. Entered at the lowest point of resistance. There's your first trouble spot, right? That divergence low. At this point, we're taking profits. Maybe we're break even. We're not exiting the trade because it still has momentum to the downside. But we're not willing to risk anymore. If divergence prints, it's appropriate to exit this trade. Your ability to read your indicators is going to help you manage medium probability trades. If this continues down, can we identify where the market is likely to go? How do we feel about 70.98 as a profit target? Half off at the trouble spot. 10K, take care. No risk on the trade. Using momentum to identify the next target. That's all we're doing, guys, over and over. Rinse and repeat. Take a trade, take a picture, put it in class. Take a trade, take a picture, put it in class. Let's talk about it. What do you see? What do I see? The more you write on your charts, guys, the more you're going to get out of this. Anybody have a last minute question for me? Something you'd like a little clarity on before we call it? Ron, enjoy that beach. Say hi to the waves for me. It's 43 and cloudy here in the Pacific Northwest. Guys, thank you for being here. Thank you for letting me talk through what you're doing. It helps me a lot to help you. If you're brand new, do me a favor. Bobby T, I didn't, but I will. I'll message it over to you. I know it exists and I know that I have it. I just have to find it. Oh, there it is. All I had to do is say I'll send it over. Careful what you wish for, Ron. So there it is. There's that 50-50 picture that I was talking about, guys. Bad high, nothing going on. Watching that 50-50 just to resume the trend. It's not a guarantee, but at least gives me something to think about. All right, guys, I'm going to go look for high probability trend trades myself. I hope you learned something today. If you're brand new, I hope that if nothing else, you've got the recognition that the class creates accessibility for you to come in, for you to ask whatever you have to ask. It's not a very threatening environment. And my goal is always to help you get to where you want to be. Tony on the 50-50 here, right? 13.2 still say down. 5.1 still says down. Quick profits, no risk. You guys let me know if it hits 70.98. I'm going to go open up a couple charts, guys. I'll see you tomorrow morning, 9 a.m. If you do anything in the afternoon, if you take market replay trades, take pictures, post them tomorrow. I'll see you tomorrow, guys. Take care.